Hey all, Sean Maloney, Digital Business Masters. Hope you're well. Another DBM strategy call as we enter the last month of 2025. Amazing year we've had, and it will be even more amazing going forward, just as every year has been for as long as we've been in this space, which is well over a decade now. So, biggest information you'll hear anywhere is available to us at our fingertips if you care to look. That's all this is about. At the end of the day, if they fix the money, they'll have a very good chance at fixing the world, okay? But it has to be fixed by the people. That's the difference. So we'll have a good look today, actually, at the standoff going on between the establishment and the people. It is always very interesting. It's about the fourth time we've seen this in the past decade, so nothing new under this sun. Then the second part is it's all very well having this information, but it's what you do with it. And it's not a case of doing it once or hit and hope, or trying to buy success, or speculatively spending money, thinking it's going to solve your life. You've got to run a business. And that doesn't need to be as complicated as it sounds. Okay? It can actually be fun. But you've got to know when to move. And that's what we do in part 2, as we'll talk about for those of you in the Systems Plus subscriptions. Link below if you want to get involved with the Academy. We're not here to give you any advice whatsoever. What you do is your business. We always say at the Academy, always seek financial education. If you think seeking financial advice has done you any good over the past 30, 40 years, then maybe it's time for you to take some responsibility for yourself. Now, this is a slide that we've had up in the Academy for many, many, many years. Okay, it's relevant again today, just as a reminder, actually, that if you are going to work as close as you can as an individual or a business to the center of the money supply, you have to put up with what it takes to be involved with the center of the money supply. And that is all about geopolitics and macroeconomics, whether you like it or not. Now, all we can say, because it took us a while to understand this as well, because it's not normal. You're certainly not taught this at school. Your parents probably didn't teach you this. And bosses, banks and governments are certainly not going to teach you this. But when you do understand, it is actually a gift. It's actually a luxury, a privilege to be in full awareness of how the hegemony, in other words, the management of the center of the money supply, actually since 1912, but certainly since 1971, it's actually a privilege to know how it works. When you first get involved with it, you think, oh, sometimes you might think, I wish I didn't know this. I wish I lived in ignorant bliss. I wish I could walk with my friends and my family and just think normally and talk normally, with my head in the sand, working a 9 to 5, having a job, which is nothing wrong with that, by the way. I'm not judging anybody. But you might look at it when you do know what you know, and you can't unsee what you've seen, to then think, wow, I feel like I've come from another planet. That's actually what it does to you in psychology and mentality. And that's why we talk a lot at the Academy about mindset, because you have to push over that point. Now, I would not blame anybody looking at the behavior of the hegemony, the ignorance or complicity of bosses, banks and governments, certainly over periods like we're in now. I wouldn't blame anybody for looking at that and going, this is too hard. I cannot wrap my head around it. I would not blame you for that. Believe you me, when we decided to go on this journey for ourselves at DBM at the back end of the 2008 financial crisis, it shocked the hell out of us. And actually still does. Because some of the things that go on, hidden in plain sight, with ignorance or complicity, and we still don't know which that is, honestly. 10, 15 years in, we still don't know what it is in the governments and the way that institutions like Wall Street operate. We still don't know whether it's ignorance or complicity, especially on the government level. Depends where your personality type is, actually, right? A lot of people will get drawn in to the talking heads, the media, and take that as read, and that is what it is, and everything's okay. And then a growing number of people are starting to really question everything and turn everything on stone. And then you've got a smaller group who really take it to the nth degree in terms of conspiracy and all sorts. They'll argue with their own shadow, those guys. So it actually comes down to the quality of who you're following on all three spectrums. And the truth actually is somewhere in the middle, in our experience. It tends to be somewhere in the middle. Now, hopefully what we do a good job of, and what certainly I've tried to do for most of the last decade, is summarize things in a way that are as simple to understand as possible. It is complex, digestible, and most of all, not frightening, so that you do have the motivation, the means, the support, the lightness to have in you what it takes to stay the course, right? And if you're listening to a call like this right now, or you're listening to this in the recordings over in the academy or etc., because you're within the community, then you are that type of person who is able to put through, right? If people outside of it, you'll know in your own lives, they just throw the towel in. I can't do it. It's too difficult. I can't handle the volatility. People call it volatility, right? Especially in assets like Bitcoin, right? If they can't handle it, they can't handle it. There's nothing you can do. You just have to know the big picture, which is what this slide originally was designed to do 6-7 years ago when we first brought it to the academy. All right. The base fundamentals haven't changed. Just own the underlying asset. And it's even, we're vindicated now, because when we first started talking about this particular slide, we didn't know, or even deep down, maybe even expect Bitcoin to become a fundamental element in the foundation to how people transact. We knew about gold, of course, and we knew about the full fiat system. But did we really, 5 years ago, truly believe that Bitcoin would become part of that foundational element? Probably not. But it is now. It absolutely is now. And what you're finding happening inside 1 year, with all the excitement of growth and then the deflation of what is perceived to be a step back, but then you look at the bigger picture and you realize it's not. You see that Bitcoin now has taken its place as part of the fundamental foundational fabric of what value represents. And now we're on a bit of a cusp. A cusp. Who's going to win? Right? But as you'll find by the end of this call, it's not really about who's going to win. There can only be one winner. So the overriding position on this, as we've said for years and years, it is without being destined to fortune, without being biased, without just thinking that this is an easy ticket to save us doing anything else harder, even though there's nothing harder than doing what you're doing, guys. The overriding message is just own more Bitcoin this month than you did last month and touch grass. It sounds simple. It sounds too easy. But as you'll know, if you've been at this game for a while, it really isn't easy. It isn't easy. You have to earn it. You really have to earn it. So fair play. All right. That's a bit of an arms round everybody type overview. But at the end of the day, we've got to get back to business, because nothing's changed. It's all about making sure that you are building a critical mass, a balance sheet of net reserves that allow you to move closer and closer and closer to being in a position whereby you can fund liabilities through equity and yield. That's the job. If you understand it well enough, you'll know that that's actually what retirement is. But you're 100% giving over your future to bosses, banks, and governments on the basis of a system called fiat currency that is not possibly able to give you what you think you're being assured. So the sooner you get to the point where you are owning sound money, you are owning monetary energy, the sooner you get to that point, and the sooner you put behind you years and years of accrual of an asset that is accretive, the sooner you get to the point where you can be in control of equity that you can then, if you choose, reallocate into cash flows Or if you don't choose to do that, then just hold the asset and wait for the growth. But as we'll talk about more and more, especially as we go into module 4 of the Wealth Builder series next month, you also have a duty of care to contribute to that. There's no free lunch in this life. You have to contribute. That's the work. That's the proof of work. That's you doing something, frankly, that should make you feel better about yourself, that you've contributed to something that's worth something. Takers are losers. You've got to contribute and give. That's the work. You'll feel better about yourself when you work hard, of course. So basically the model at DBM is simple. We accrue the accretive asset. We take some of that equity that is inevitable from Bitcoin. Okay, I know this year's been slightly different, but we are going through this transition. We'll look at that more in a minute. We take some of the equity, we allocate it to what are called smart contracts and look for as many ways as possible that we can create yield. Yeah, that's not something you have to do, but it's something we choose to do at DBM because we know we can't run a successful business purely off a balance sheet. It's impossible. Eventually, you'll run out of assets, right? So the whole idea is you've got to put yield in place and then learn how to build that big enough and take advantage of liquidity events as and when they arrive and diversify and reallocate and reallocate and reallocate and keep going. That's what running your digital factory is all about, yeah? It's not easy, but the case of point there is that it is possible and it is being done. So we look for that. And then if you're really good and you really want to get involved with some of the really testing sides of what this industry represents, you may want to look at isolated projects and platforms and companies that provide you the ability to own the underlying asset, often known as an altcoin. Be very clear on the circulating supply and the true value and all the rest of it, and understand utility and where the revenue is coming from and whether it's got real use in real life, all the rest of it. And then understand that over time, you can grow with the company, owning assets that manifest itself in price discovery, and then you can reallocate portions of that equity into a self-looping yielding system inside of that company itself. Yeah. Now we've been studying this now for most of the past 7, 8 years and found it to be obviously challenging, but doesn't take away from the fact that this exists. And it doesn't take away from the fact that now the big institutions are now even talking about tokenized value. We've been talking about tokenomics and all the rest of it for a decade. Now the institutions and the banks and the governments are now talking about it. So we know we're in the right lane. We've just got to get through what we've started and push on to the next phase, between now and 2030. So this is a long-term business plan, all built off the back of the world's most powerful version of sound money, which is Bitcoin. That's basically all we do, okay? Now, to help that along, we have a whole academy, we have a whole support structure, we have all sorts of abilities for people to chat with each other every day and chat within hubs and forums and podcasts and everything. We have all sorts of things going on because we recognize a long time ago that doing this on your own is virtually impossible because you will find reasons in your own mind to walk away. You'll certainly be influenced by people around you who will convince you to walk away. And there'll be all sorts of big macro and geopolitical slings and arrows coming across your business that will give you every reason to walk away. That's just the way it is. So you've got to be in an environment of like mind, of people who've got what you want and can prove it, who've been through the trenches, come out the other side, been through, the undergrowth of the deep forest and come out into the glades and seen the light, all the metaphors you want to put at it, right? And then you just keep working with each other. That's how it works best, So the academy, yes, it is an academy. It does what it does. It teaches people from, right from the beginning in mindset all the way through, just as the Wealth Builder series does. It takes you from module 1 to module 12 in, a 12-month series and does everything you need to do to build foundation and then build into creation and build into management, right? And lots of people, once they've been through that, just end up in project management. Yeah, so more and more of what we do is actually project management than ever before, which is what part 2 is all about, right? But this Wealth Builder series is using AI. It's making us super efficient. It gives us abilities to put into the world this most powerful information you'll ever hear at a very low cost barrier, very low price point. And it is perpetual because a lot, obviously, honestly, modules 1 to 6, I'd suggest, are evergreen. It's just stuff you'd need to do, right? And then it gets a little bit more malleable and it moves quicker as you start to get into management, right? Because the whole idea is things move quickly, in case you haven't noticed. So the job is to make sure that we stay on top of that. And most of all, we support people through it. So get involved with the Wealth Builder series, you're not already. $25 a month, and you can be right up to speed in no time. This coming month is all about the tools of the trade. Remember what I talked about contributing to the system and being part of the system? Well, a lot of the tools that you need to do that, all right, and first of all, tried and tested tools, because it's in the online space, you can press the wrong button and you can lose everything. So you need to know what you're going to be doing as well and which tools are trusted. So that's what month 4 is all about. Module 4 is all about. So we'll see you there in December. Okay, so reminder again is before we get into the microeconomics and the geopolitics, keep an eye on the big picture. Zoom out when you get a little bit shaken or you feel a little bit out of control, right? Maybe your skill sets aren't quite where you want them to be. Maybe you're not quite using the tools of the trade properly. Maybe you just need a bit of a sharpener. That's what this call is all about, is to keep you on point, keep you in lane, okay? Zoom out, have a look at what's going on. Be very careful who you're following, okay? You've got a lot of click monkeys out there. They'll get you to watch and read all sorts of frightening stuff just to get a click out of you. You're running a business, right? Try and work with the best people you can. Try and get as close as you can to the actual people who run the show. Yeah, that's been a big part of the drive, certainly from DBM's point of view over this past couple of years, trying to get relationships with people who are right at the top, right at the top. It's not as hard as it might sound these days, okay? So try and do that, and everybody else is just got an opinion, right? Especially in times like we've had this past month or so, right? Because it can shake you, it really can. But you've got to zoom out, and you've got to look at what's going on. Nothing's changed. Absolutely nothing has changed. It's all about knowing that we've come from what, if you think the last few months was rough, you should have been around here. Right? To have the fortitude and resilience to hold on from 12, 16, 20, 22. If you've done that, this is child's play where we are today. Absolute child's play. So you guys are fine, right? Nothing you've not seen. But if you're at this relatively new, then we would not blame you for 1 second for looking at this and thinking, wow, this is just too much to comprehend. It's just too big. Like I said at the top of the call, you may get times in your life where you look at this stuff and go, do you know what? I wish I didn't know this. And you'll certainly get that when you're talking to friends and family at Thanksgivings and Christmas and whatever. And in fact, I wouldn't even bother going there, right? Unless they ask you, I wouldn't even bother going there because people are so frightened of self-responsibility that they'll give you every reason under the sun why you shouldn't do it either, because it makes them feel better, right? Because they don't want to face the challenges of the next few years. They just want to ride through it with their head in the sand. That's the average person. Don't be the average person. Be the person that's going to go out there and make a difference. So the big picture's not changed. We'll see multiple all-time highs in 2025, and we'll see multiple all-time highs in 2026. It will just keep going and going and going and going. Will it always be wonderful? Of course not. Does it look like it was? The management of this is a wholly different thing, right? That's what part 2 is all about. If you're in this and you're managing DCA and you're managing collateral and you're managing leverage and you're managing projects and you're managing yield and you're managing equity, in the day-to-day, it's going to have a go at beating you up. But welcome to the world of business. If you don't want to get beaten up, go and work a day job. You're not cut out for it, right? But more people are cut out for this than I think they give themselves credit for. And we know that because we work with people every single day in the academy. That's the whole point. Road less traveled gets you where you want to be. Right then, how do we stay so motivated and focused and absolute steely determined? How have we done that over a decade in this space? Well, because, like I say, if you're going to play in the center of the money supply, you've got to understand how the money supply works. If you're not there yet, go back, go to where to start in the academy, read the books, understand the difference between currency and money, realize that currency is broken, understand where fiat comes into that, recognize what's happened most of your existence, understand that the best decisions were made 20 years ago, the second best ones are made today. Own assets, own assets, own assets. And then get yourself on the front foot with where we're at. So my job every week is just to review to the best of our ability with as much fact checking as we can. Yeah, because we're pulling this information in from all sorts of different places, especially these days with AI. So we have to check stuff. All right, but all we can do is get a sense of the overall sentiment of what's going on and then put ourselves in a position whereby we're not just looking for positivity. We're not just looking for validation of our opinion. What we're looking for is a roadmap that we've proven to be right before and before and before and before. And it's not even about being proven to be right. It's about knowing that there's something fundamentally wrong. It's either ignorance or complicity. It's coming from the centralized powers that be, what we call the hegemony, mainly politics and macroeconomics. And then every year that goes by, we look at it and go, blimey, I'm glad I knew that. I'm glad I did that back in 2015. I'm glad I did that back in 2010. You need to look back in a couple of years and go, I'm glad I did that in 2025. And the only way you keep that level of conviction is by studying. All right. So my job, hopefully, every week is to help that along. And we just go through some of the headlines. Like I say, we fact checked as much as we possibly can, but you just never know in this space because it does move very quickly. All right. So municipal bonds, big part of liquidity. We've known about this for a long time. Again, a lot of US stuff coming through over this past year in particular. Okay. This is as per Crypto in America. BFA is approved 100 million a New Hampshire-backed municipal bond fund. So again, we know these more friendly states than others in the US, actual states themselves. First in the US, the state aims to allocate 5% of its treasury to digital assets, whatever that means. Okay. Hopefully they stick mainly in Bitcoin at that level, but we'll find out. Sailor, we'll keep an eye on this guy. So these are the type of guys you want to be as close as you possibly can be. This is the type of person I'm talking about before. Yeah. You got people like Sailor, mentioning last week that pullbacks always lead to new all-time highs, which is true, which is pretty obvious, right? Of course they do. Bitcoin has had 15 major drawdowns in 15 years. Don't we know that? And it's always come back to new all-time highs. Absolutely. Pullbacks flush out the tourists and prepare the runway for the next rally. That's just the way it is. Yeah. But now the difference now, you've got retail tourists that always cause those pullbacks back in the day. Now you've got retail tourists, but you've also got corporate tourists. We'll talk about that in a minute. Another guy you want to follow as close as you can, he's one of the guys we originally started listening to back in 2014 on the Max Kaiser report. Very, 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 very entertaining guy, it's got to be said. But he's always been there, and he's someone you should be following. Okay, he said last week, as the fiat money cartel is waking up to their extinction event, he's spoken about that forever. In other words, Bitcoin is their extinction event. They're attacking Bitcoin, of course, right? They're crude naked shorts and smears are lame. We face ripping rally loading. What do you mean? Face ripping rally loading. It means things go up very, very quickly once these guys have had their fun. Yeah. Now that's standard Max Kaiser. Standard Max Kaiser. Yeah. He's totally against the established system and always has been and always will be. Okay. But we are seeing some games being played that are much, much more profound to the behavior of what many of us follow, which is price. We can't help it, can we? Because that's what we're attuned to. But there's much more aggressive movements than we've ever seen out of retail going on. And we've just got to push through what he calls, and Sailor calls, the tourists. It's okay. It's okay. It's no problem. The world's most profitable hedge funds, Renaissance Technologies, just disclosed holding over 225,000 strategy master shares. Okay, so we'll come back to master in a minute because There's really only been one talking point over the weekend this week, and it's all to do with Master and JP Morgan. Billionaire Ray Dalio, 1% of his portfolio in Bitcoin. He announced that live on CNBC last week. Again, Ray Dalio is a bit like Kiyosaki. They need to go out to grass now, these guys. They don't fully understand the technology, but they have jumped in, etc., etc. But they are now a bit long in the tooth, in my opinion. So fair play to them. You can't say anything against them, but some of their opinions are a bit off the wall these days because they obviously don't understand the technology. But they do own it. Metaplanet will raise another 135 million to buy Bitcoin on sale. Okay, I think it did actually do this last week. 61% of the Singaporean retail investors now hold crypto through that particular company. Okay, so very interesting indeed. Keep an eye on the big treasury companies. We'll touch on them again in a minute. Bitcoin capitulation metric just hit a new all-time high. Okay, whenever we get rapid capitulation, we do end up with bigger booms back up again. You know, what you're looking for really is you're looking for higher lows. All right, and 2026 saw yet again, excuse me, more higher lows than 2024. 2025 saw more higher lows than 2024, than 2023, than 2022. So that's what you're looking for all the time, okay? As we'll talk about in part 2, if you are going to leverage inside that dynamic, you better make sure you know what you're doing, right? But I'll show you some tricks on that in a minute in the next session. So capitulation, we like capitulation, especially if you're looking to own more Bitcoin next month than you own last month, where your cash flow is coming. Okay, protect your balance sheet. The probability of 25 basis points in December has just increased. Okay, I've said this before. A year, 2, 3 years ago, we might have been looking at base rate interest rates, you know, and getting very focused on changes in the interest rates. We still do, but 3 or 4 years ago, they actually meant something. From 2025 onwards, you've got a totally different thing going on. You've got fiscal and monetary policies that are contradictory to what we've seen in the past, right? So, for example, you would not see interest rates being cut at the same time as them printing currency. But that is actually what's happening. So everything's been flipped on its head, which is just another sign of the death notes when it comes to where we're going with this fiat system. I don't know. Nobody knows. Will the fiat system end in our lifetimes? Probably not. But as I've said before, and it shouldn't be something that we're proud of saying, but it unfortunately is just a fact of life in this next period, we want them to print currency. Those of us who own sound money assets, gold and Bitcoin, we actually want them to keep printing currency. And I don't like saying that. It shouldn't be that way. Because when they do keep printing, and they will keep printing, and they're going to keep printing more aggressively, it affects the majority of people in a very detrimental way. But then another side of me says, well, there's nothing stopping all those people doing what you're doing. What's stopping people spending an hour a week listening to some information, the most powerful information in the world, and making a decision in their lives that they're going to start owning sound money assets? What's stopping those people doing that, who are queuing up at food banks, who are struggling for this month's fuel bill, who are struggling for next month's food bill? What's stopping them learning? Nothing. In this age of communication, this call, for example, is absolutely free. Cardone Capital just bought another 185 Bitcoin worth over 15 million. And, as we'll touch on in a minute, Cardone yesterday, Grant Cardone confirmed that he's closed his Chase bank account. Now, we work quite closely with Grant Cardone and his brother Gary. Like I say, you're working as high as you can with a lot of these people. We're actually on calls with them every single day of the week. And they were asking him yesterday, Gary, is that true? Is that Grant, is that true? Is that true? And he came on and said, yep, I've closed my Chase account. He's not, you know, he's got a few quid. And he's done that because of the behavior of JP Morgan on Friday. And probably all sorts of other things behind the scenes going on as well, if you're close to what's happening with the Epstein files. Citi and Swift all went on chain. Both went on chain this month. Both firms successfully trialed their fiat to crypto settlements via blockchain connectors. Okay, if you've been involved in any length of time with this industry, you'll know we've always said have at least 5 bank accounts, normal bank accounts, high street bank accounts, have at least 5 of them, 5 exchanges, and 5 wallets, right? We've always had to keep moving around, moving small amounts, relatively small amounts, sub $5,000 amounts, because the banking system just does not like what it is that is now become normalized. I'm talking about over the last 10 years. To now get Swift and Citibank, etc., all synchronized on peer-to-peer settlements across networks, I would never have believed it would be saying that, honestly, a few years ago. But there you go. They're all in now. We know MasterCard and Visa have been doing it for some time. PayPal brought it in last year, and we know we're working now with Strike and 1 or 2 others that allow us to do the same thing quite easily. Right? It's not quite there yet in the Europe, and certainly not in the UK, which is where I'm based. But if the US are doing it, you bet your bottom dollar everywhere else will too. Eric Trump said live on CNBC last week, Bitcoin and crypto can do everything JP Morgan does. Now, this is all relevant as we've touched on the final point. I'll touch on that in a minute with regards to where we're headed with this standoff. Binance founder CZ says too much money this is a fair point. Too much money is spent chasing small, quick gains in crypto. This is true. You know, we've all been guilty of this. I mean, it's when DeFi first came around in 2017, it was very tempting, right? And we did airdrops, we did all sorts of things, and we've tried all sorts. But you have to build off your equity and build into yield. And if you don't try things, first of all, you'll never learn, and secondly, you're never going to get anywhere, right? So it's true what he said there. But as newbies, as people coming in for the first time, especially people on the back foot, they've got themselves into the 40s, 50s, 60s, and maybe it's not structured quite the way they expected. They didn't understand fiat currency until they're maybe in the 50s, right? So they're going to try and chase stuff fast, thinking they need to catch ground. That's dangerous because you can't buy success, okay? So he's saying focus on ethical teams that build for long term. Big money is built slowly with stamina. Don't we know it? If you look deep in yourself, you'll know that yourself. That's why a lot of what we do at DBM Academy now is more based around project management, support structures, organization, meeting after meeting after meeting, looking for the next step, looking for the next step. Not everybody can do that. We know that, of course. Look at the gym, look at your friends, look at your business, look at your peer group, look at society in general. Most people just cannot be bothered, and they certainly have no stamina. It is what it is. And some of them may be forgiven for that when they look at some of the shenanigans that goes on. So to finish the macro this week, let's just have a very quick look at the big point of the week with regards to what's going on here with JP Morgan, Morgan Stanley, etc., and this new financial order. Now, if you want to get a deep dive into this, I'm not really got an opinion on it yet. It's only just happened, to be fair. But if you want to go on a deep dive on this, we did a podcast that we released today. Go and have a listen to the podcast, okay? It breaks down to the best of the ability and what we've done to look at this just very, very quickly over the weekend, where we see this battle laying out from. And everybody's got an opinion, of course, okay? But it boils down to two things. And obviously what went on last week was some major manipulation when it comes to the establishment trying to give a bloody nose to the institutional level incorporation of Bitcoin fundamentally. But it's not really about Bitcoin. They're attacking Bitcoin, if that's what they're doing, through the treasury companies. And the biggest one is strategy. So that manifests itself with the MSCI forcing potentially the removal of 50% of master stock from its indices. That's what was brought to people's attention on Friday, Saturday. Yeah, so it's very new, this stuff. And it gives people the jitters. Now, is it just another one of people blaming, a couple of weeks ago it was OGs. Before that, it was, policy misalignment. There's always a reason. People always have to have a reason why Bitcoin's doing what it's doing. Just accept that, right? But it's got to be said that since was it the 10th of October, there has been something at play. Now, again, it'll come down to the quality of the people you're listening to. You've got three levels, don't forget. You've got the media, you've got the professional group, which you have to isolate and find who those people are, and then you've got the big conspiracy people. Right? People are more susceptible to conspiracy in mass media. In my experience, you've got to find people who actually know what they're talking about. Right? And then not necessarily believe them either. Because there's all sorts of things, especially when you're moving at pace. Either way, what happens, happens. So you've got now this standoff going on. So the question is, will the public investor response create a GameStop moment against JP Morgan, right? Not that it'll happen the same as what happened with GameStop, obviously. JP Morgan is the biggest bank in the US. It's not going to touch the sides with JP Morgan, but it might give them enough. And that's for us, and we did this with GameStop back in 2021. It's almost a bit of fun, but if you're sat with your asset, watching price go, and you've maybe leveraged, it does give you a bit of jitters, right? But that's down to your management of your assets. But at the end of the day, the bigger picture is to keep an eye on this, because what would some people be doing right now? They'd be going out buying $100 worth of master stock and Bitcoin. That will short what JP Morgan are doing. And that puts then the people on the front foot, which is what you'll find going on in the cryptoverse. You'll find a lot of that this week, where they've now got fire in the bellies. That's the public and larger investor class. And they're going to try and give JP Morgan a bloody nose, right? So we're up for that. Why not? Why not? Yeah. It's nothing more than just sending a message back, as we've said forever, whether it's been religious persecution, political persecution, or what we're into now in 2020, the 21st century, economic persecution with financial weapons of mass destruction, which is basically what's been going on since 71, we have a duty of care to fight back. Whether you believe in it or not, I mean, you don't have to get involved with it, but we see it as just part of being part of the process. So we'll see what shakes out. Either way, nothing stops this train. Bitcoin will do what it's doing anyway. It's nothing to do with trying to get the price back or trying to get rich quick. It's just to do with having the power through this communications age and having the power through decentralized tokenomics, the ability that we have as individuals to go back and give institutions a bloody nose. What's wrong with that? So stay vigilant, keep your DCA moving. Cold storage, as we've said for all the time, is your strongest protection. If you are working to operate with leverage to raise de-risk cash flow, then make sure you know what you're doing. Talk about that in part 2. And just be ready for the next price surge. And in the meantime, go and touch grass. Yeah, it is that simple. So be careful of the noise, stay focused, and if you want to get involved with an opportunity we have now to give JP Morgan a bloody nose, and let's get on with it. Geopolitical updates, not that much this week. A lot of it is in the macro, but safe to say, we're getting impatient, aren't we? So 65 crypto firms have urged Trump for action last week. They all wrote to him and said, come on, let's crack on. The shutdown obviously didn't help, but they're looking now to bypass Congress and just get these clarification and digital asset regulations all in place. You saw Coinbase at the White House most of last week. They're spearheading a lot of this. So yeah, fair enough. Good. We'll slipstream that. Thank you very much. Senate banking chair wants a committee vote on crypto market bill by December. Some people are talking about before Thanksgiving, which I think is this week. So we'll see. Chair Scott said the goal is to send the Senate out early next year to get Trump to sign. Okay, so it's imminent, right? Whatever it means, it means. We'll do some work. We are doing some work on the stablecoin acts and what it actually means behind the scenes. We've got a blog coming out this week, which will give you something to think about with regards to what's going on with the small print of the stablecoin acts and having people indirectly funding the Treasury, because the small print actually says that anybody who works with stablecoins is directly contributing to the Treasury liquidity of the USA, right? So it's much bigger than just working with the US dollar now. So we'll look at that, but okay, We'll have to make our own individual opinions on that, but that's where it's headed. Okay, so we'll see. Interestingly, New Zealand and their teaching in crypto schools initiative, which we heard about a few weeks ago. Good for them. Good for New Zealand. Well done. Digital currencies to be added to financial curriculums years 1 to 10, starting next year. Okay, we know that more and more children, we should be doing this. Well, you have to do this as parents. It's not should be, you have to. You have to. Anybody who has had the luxury and privilege of parents in business and parents who are financially astute knows that is a much better start in life than just going through the system and becoming cannon fodder for the fiat system, right? So if you're now in a position where you do have these skills, which all of you will have if you're in the academy, get out there and teach your kids and go forth. We need it in the curriculums as well, so fair play to New Zealand. Congressman Warren Davidson introduces the Bitcoin for America bill. Okay, this is another big move. Warren Davidson is a big advocate of what's going on here. The big ones here are codify strategic Bitcoin reserves to an executive order. That's what we were talking about before. Eliminate capital gains when paying taxes in Bitcoin. Interesting. Allow Americans to pay federal taxes in Bitcoin and route that Bitcoin to the US Bitcoin reserve. Now, that's how it should be. That last point is exactly how it should be. Just look at what Norway did with their sovereign wealth fund with the North Sea oil over the past 4 decades. Look what Dubai have done. Look what Bhutan have done. Look what El Salvador has done. What is wrong with everybody contributing to a net capital reserve that's accretive, that means that then grows on a global interconnected balance sheet that provides more wealth to the countries involved that then can be used to fund services that help the people? What is wrong with that? What's difficult about that? Nothing. All that's difficult about it is a lack of imagination and a lack of political desire. So let's see what comes from this, because if we can get this through in the States, you bet your bottom dollar other countries will observe it, and political parties looking to shake out hegemony will follow this model, and off we go. So it's inevitably going to happen, in my opinion. All we do as individuals is front run it, because as this is happening on a geopolitical level, we get the ownership of it on a much smaller independent level, which is all on a globally connected balance sheet called Bitcoin, and we all grow equity, and therefore we get on with our lives no matter what our government does. That's the point. We vote with our feet at the beginning in our own households. We don't go out and vote and hope things are going to change top down. We change it from the bottom up. Speak to your councillors, speak to your MPs in whatever country you're in, and get them to shape up, because all they're doing at the minute is moving deck chairs. Last but not least, the Abu Dhabi Investment Council on why they tripled their investments in Bitcoin. We view Bitcoin as a store of value similar to gold. No shit. We see Bitcoin playing an increasingly important role alongside gold. Yeah, welcome to the party, Abu Dhabi. All right, so that's where we're at geopolitically. Lots going on there, guys. Now, last but not least, as I say, a lot to take in there. If you want to get into more of these conversations, more one-to-one support, go through the Wealth Builder series, build a structure accordingly, make sure you're in position for every single time we go around these cycles. You need to be in the academy. So we'll see you in there. Any questions, pop them below, and we'll see you on the next call.